Hi there, welcome to Kneppy Invest and welcome to March 20, 2025. There's about 1 hour and 5 minutes left of trading today and no complaints about how our market has performed today apart or except if you're heavily invested in mining companies. I'll just notice resources is actually down, tech's up 2.1%, small caps up 1.37% and XGO 1.07%. And this is not a surprise because we had a really good lead in from Wall Street. And the main reason Wall Street had a good day is because Fed kept interest rates where they were and sort of hinted at the possibility of 2 more interest rate cuts in the next year, which is not necessarily a good thing. And I think it all comes down to inflation and the state of the economy. So if America does go into a recession, interest rate cuts will drop, but that's not necessarily good for the stock market. Now, if America doesn't go into recession and they drop interest rates, that is good for the stock market. So it's all dependent on the economy, and the main driving force behind whether the America goes into a recession or not is Trump and his infatuation with tariffs. Okay, so the agenda for today's video is go through the best and worst performing sectors, indices, and also companies. And then we'll have a look at the top 5 stocks of the day. I've already quoted the stock of the day, which is Pioneer Credit. This was motivated by an announcement the company did release, a really fascinating title in regards to a false market, and also a comment from Ben Hutchison. So I'll honor that video to Ben Hutchison. I've already quoted that video. And Nanosonics, very close to being stock of the day. In fact, if Ben Hutchison didn't leave that comment, Nanosonics would have been the stock of the day. Few half-year, full-year results from Sol Patterson and Brickworks. They released their results at the same time. And also Sigma Healthcare. I got a little bit excited about Sigma Healthcare, but this was not results that included Chemist Warehouse. This was the old Sigma Healthcare, and I have no interest in that part of the company. Cleanaway Waste, I think it's called. Cleanaway Management, I forget what they're called. I see the trucks everywhere. They've made an acquisition, and Judo Capital share price dropped because of a massive block trade, huge block trade. A few other companies that got close to getting the top 5 included Blayside Studios, and that's it. Yeah, that's it. Okay. And after we go through the top 5 stocks, we'll have a look at Findi. I completely forgot about Findi. What was I doing? Findi should be in the top 5. I'm sorry, we'll get rid of Cleanaway. Yeah, Findi, top 5 without. I completely forgot because I put it down 2 days ago because I went in trading halt and they came out of trading halt today and the share price should be up a fair bit. So completely forgot about that. Thank you. I left a note yesterday or 2 days ago about Findi. Okay. So let's have a look at the ASX today. Yeah, pretty good day. No complaints. In fact, the indices have gradually risen during the day. That's a good sign. I like that. Although the XAO has been slightly dropping the last hour. That's nothing. It's nothing. It's just a bit of noise. And the best performing sectors, IT, of course, real estate, probably a good day from Goodman Group, healthcare, financials, discretionary, industrials, telecommunications, all up by over 1%. Not the best of days from staples, utilities, and materials. I'll say staples and utilities tend to be more defensive, and because there's a little bit more enthusiasm in the markets today, there's probably a little bit of rotation out of defensive companies into more risky perceived assets like IT. So not surprising that staples and utilities are down and materials down 0.57%, which is surprising. Well, maybe not surprising because you don't see a correlation between materials and gold. Gold's up pretty good today. So gold's just on a massive tear. So I'd say probably iron ore's had a weak day. Banks has a pretty good day. In fact, everything's had a good day except mining, really. ASX 20 up 0.96%. I think the weakness in the ASX 20 is probably iron ore. So I'd say 5 companies down, 15 up. Or 16 up and 4 down. I'd say, and it wouldn't be surprising that the 3 iron ore companies have fallen today. So let's have a look at that. Yep, there we go. Fortescue, BHP, Rio Tinto, and of course, Woodside Energy. Fortescue down 3.31%. So obviously, fair bit of weakness in iron ore today. Best performing companies, I'm going to imagine some tech companies. Could be REA Group, WiseTech, Aristocrat, So let's have a look. Oh, Macquarie Group, Aristocrat, REA Group, of course, Goodman Group, and WiseTech. So no real big surprises there. Not surprising to see the banks bounce because they have pulled back a fair bit. And even though particularly CBA are still well overvalued, whenever you see the share price pull back, there's going to be a little bit of buying coming in because people have very short-term memories and they remember CBA was $160 not that long ago and they think, oh, it's pulled back $15. What a great buy. Not necessarily true. And yeah, okay, so that's really all I'm going to talk about when it comes to the ASX 20. Now on to the top gators. What do we have here? Let's see if I've missed anything. I would have missed something. And there's Findi. So I would have remembered Findi when I got to this point. So Findi went into a trading halt the other day in regards to a positive impact from a change in the fee structure for ATMs in India. And they also decided to do a capital raising at the same time. I thought maybe that's not the wise thing because the share price, I thought, would rise by 20 or 30% on the back of that positive announcement. But it's done it anyway. So it's up 24.12%. The capital raising was done at a discount. It doesn't matter. Share price up 24.12%. Other than that, nothing much within this list of companies. Most of them are small. Yeah, most of them are small. Even Findi's only has a market cap of 279 million. That's after the rise in share price today. So let's move on to the top gainers by market cap. What do you have here? Nanosonics, very close to being stock of the day. Boss Energy. So looks like there's been a bit of a rally in uranium. So Boss Energy up 9.6. Clarity Pharmaceuticals, not surprising, that share price of that company's rallied. It's dropped a fair bit the last 3 or 4 months. A few tech companies in here, including Weebit Nano, story stocks. I'll call that company a story tech stock. And yeah, nothing much else here. That's interesting. Thought there might be more to talk about there. Okay, so on to the top losers. What do we have here? Okay, Rare Foods Australia. Yes. Okay, Rare Foods Australia is delisting. And I did not have a look at the reasons why they're delisting. I have no interest in this company at all. I saw their announcement. And I just went, oh, another company who probably is saying that the market doesn't appreciate the value of this company. So we're going to delist. And then the share price absolutely tanks. It just doesn't make sense why companies would say that. I say use other reasons. So let's see what they say. If they've said here, because we're undervalued and we're not appreciated by the market, I say BS to that. Here we go. Back down and rationale. Oh, they're talking about declining global demand for seafood products. That's interesting. And in particular, abalone. Is that abalone or abalone? As a result of macroeconomic factors such as high interest rates, inflation, and low wage growth, has resulted in less discretionary incomes for consumers, negativity in the current market. This is much better reasoning. So as a result, the company recognizes the need to reduce its costs significantly to be profitable, and maintaining an ASX listing adds significant additional costs to the company's business. So they're just saying costs, and I appreciate this honesty. Whenever I see companies' management say, well, the market doesn't appreciate the value of this company, I just say BS to that. So at least they're being honest here. It's about the costs. Market conditions, cost reductions. Oh, wait. Okay, I take all that back. The second point here is share trading prices undervalue the company. No. Because lack of liquidity, I can sort of understand that, but it blows my mind. They always use the market doesn't understand the value of the company. And then whenever this happens, the share price of the company drops 37%. It always happens. So what do you think now? You just made a decision because it undervalues the company, but now what is it? What's the value of the company now? And the thing is, the absolute truth is a company is valued more on publicly or, public exchanges than privately. And that's an absolute truth. Companies are valued more when they're traded publicly than privately. So this is a very normal thing to happen, to see the share price drop and the valuation drop, because RFA, Rare Foods Australia, is worth less as a private company than as a public company. It's an absolute truth. It doesn't make sense when they say, oh, the market doesn't understand the value of this company. Anyway, I wish they didn't include that. I would have been behind this. Well, not really, but anyway. Let's have a look at the chart for RFA, by the way. Yeah, whatever. The share price was like 9 cents not that long ago. And I'd say based off probably the performance of this company, without knowing much about this company at all, I don't really follow this company, Rare Foods, I would say, let's just have a look at the most recent Appendix 4C. This company is not profitable, not generating cash flow. I'd say their margins are fairly low, so they might produce a fair bit of cash receipts, but not even their cash receipts 1.1 million. And even with $2.4 million in government grants and tax incentives, the company was only operating cash flow positive 939,000. So they were really operating cash flow negative by 1.4 million. Yeah, there's nothing to see here when it comes to Rare Foods. How can you say this company is undervalued? You're not producing any cash flow. You're not profitable. And you've just mentioned all the significant factors, all the significant headwinds against your company. Anyway, that's the last time I'll probably ever talk about Rare Foods Australia. BSA, share price down a fair bit to a month ago on the loss of, NBN contract. The market cap of the company now is just almost worthless at 5.18 million. This is the problems when a company just has one big customer. If they just lose that one big customer, they're just gone. Just gone. They did release something today. I did not have a look at it. Don't really care about this company all that much. Share price down 24.7%. NBN Unified Field Operations Transition Update. Okay, so they're transitioning from getting a fair bit of receipts to no receipts. And I suppose this is their plans. And it looks like expires on 30th September 2025. And the volume of work orders issued to BSA will progressively decrease from around May 2025. We're talking about, well, just over a month from now. Is expected that new work orders will stop being issued to BSA from about mid-July 2025. We're also talking about costs here. So this is going to cost the company a fair bit of money, 6.5 in the current financial year. The cash flow impact is expected to be approximately $10 million once employed entitlements are also included. So we're talking about significant costs here, $16 million for a company that has a market cap of $5 million. Yeah, I wouldn't be surprised if BSA is no longer on the ASX within a few years. Let's have a look at the chart, by the way. And yeah, there's no reason to even think about buying this one. You can see, look at that share price drop in one day, down 83.84% on the loss of just one contract. Yes. So for those who were shareholders of this company, lessons learned. Don't do that. Nothing else here, I think. Imogen, was it Imogen that did a couple raising? I'm pretty sure this company did a couple raising. No, I'm wrong. Although, granted FDA fast track designation in blood cancer. So was the share price up a fair bit yesterday? Yeah, up 14.3% yesterday, down 10% today. Interesting. What company did do a capital raising today? I can't remember. I'm pretty sure it was maybe it was Imricor. IMR. Maybe it was Imricor. Oh yeah, capital raising. There we go. It's really interesting. $70 million capital raising, and the share price is up. So this probably needs closer attention. That's interesting. Share price is up 7% on a capital raising. So market likes this capital raising or equity raising. Interesting. Now let's have a look at top losers by market cap. Spark New Zealand, I'm pretty sure they've gone ex-dividend. Judo Capital, I'll talk about later in the video. Myer Holdings, maybe ex-dividend, I have no idea. I'm trying to remember what other companies have gone ex-dividend. And we can always have a look, if you have a look at most popular pages, upcoming dividends. We had Cochlear, A2 Milk, Spark New Zealand, and I didn't see any of these other companies here. And I think the main reason is the yield not that large apart from Spark New Zealand. So we can definitely understand why Spark New Zealand share price is down 6% because their yield is 6%. So that makes sense. Share price should drop by the yield, or almost, maybe not exactly the yield, because if they have an interim and a full-year dividend, then it's going to be a little bit different. Okay. Well, that's it when it comes to the best and worst performing companies on the ASX. Now, let's turn our attention to the top 5 stocks. I will try to go through this fairly quickly. Judo Capital, share price down 6.74% on a block trade, a pretty big block trade. Where did I see? I saw this somewhere. Yeah. Anyway, this must have been in the news flow somewhere. So I did know about this well before the market opened, and there it is. Yeah. So just after 8 a.m. I knew about this before 8 a.m. There must have been something in the AFR, Judo AFR, I think. Judo AFR. Oh yeah, here it is. In fact, yeah, it was yesterday. A Bain Capital GIC in 191 million sell down at Judo. So there we go. So I did get this information. Wasn't last night. It was this morning before the market had opened. And yeah, so there it is. $1.74. They sold a lot of shares. Cross trade. Interesting enough, whenever you see this sort of cross trade, the share price tends to fall towards that price because people think, well, if they're willing to sell at that price, that must be what they think the company is worth. Well, not necessarily so. You always see these cross trades at a lower price than what the share price was trading. I'm not sure exactly why. I sort of can understand. But it seems to me if whoever bought the shares, I suppose the selling point would be you're getting at a cheaper price. But if the share price drops to that, then it's not a cheaper price anymore. If I was wanting to sell some shares, I wouldn't do a cross trade. I'd just sell on market over many, many days at a higher price. Maybe there's a fee there. I don't know. I'm not the person who has, 100 million shares to sell at a price or a valuation of $200 million. Oh, $200 million. I wish I had $200 million. Anyway, they decided to sell it at 174. Share price has dropped to 173. It's understandable for that to happen. I wouldn't be surprised to see the share price bounce after this. Wouldn't be surprised. But this is like a broker recommending or changing the recommendation of a company to a buy or a sell. You'll see the share price fall or rally on top of that. And usually the change in share price, it only lasts, or the enthusiasm or the lack of enthusiasm only lasts a few days, if that. So I wouldn't be surprised to see Judo Capital bounce quite significantly tomorrow or the next few days. If it doesn't, that would be concerning. Let's have a look at the chart for Judo Capital. I am trading this one. I do have it just below my sell price, so hopefully there will be a bounce. If I don't see a bounce, I will just take my profits in this one. And it's disappointing because the chart looks really good for this one. It looks really good. It's just bad timing today. On a good trading day, share price has dropped, but that's okay. Share price has fallen through my sell point, and this is why I don't put stop losses. I just want to analyze it. So I want to analyze. I would have been stopped out on open this morning. And what price did it open up? $1.75, yeah. So there's no reason not to just be patient. And the other thing is the one-day Commsec is actually quite bullish. So we have seen some buying coming in. So that's Judo Capital coming in number 5. Oh, Findi. Yeah, this probably should be higher. Yes, I'm going to put Findi a little bit higher. And what I'll do is I'll talk about Soul Pattinson and Brickworks. Both companies release their results. So whenever they release their results, they release them together, don't they? Because they have cross-ownership, that sort of thing. And to be honest with you, there was a scenario where I completely did not talk about either of these companies because you'll notice the share price of Soul Patts is only down slightly, and Brickworks wouldn't be surprised if it's down or up slightly as well. Yeah, up 1.47%. So their results have not really moved the market. So there's no surprises in there at all. I do like to have a look at Soul Pattinson's presentation. And the main reason behind that is because a lot of times they will put in their holdings. So this is the sort of company I can definitely see myself holding for sort of like a forever stock. Now, I don't necessarily think their holdings, particularly in their strategic portfolio, are really good positions. And that's what I like to look at. So they have, what do they have? They have 5 or 6. I don't know. The other thing is, yeah, they always increase dividends. So what's that? 25 years consecutive dividend growth. And I still think there'll come a time when they shouldn't increase dividends and they'll just increase dividends so they have this to talk about. There will come a time when that will happen. You also notice there's been a sort of an acceleration in dividends over the last few years as well. Anyway, they have, what do you call it? By the way, if you just put all your money into Soul Patts, you've done really well. So Soul Patts over the last 25 years has grown at 13% per year, and the All Ords at 8.5%. So yeah, I can definitely understand why people would hold this or want to own this for the long term. Now they do have, what do you call it? Here we go. They have six different portfolios, I suppose you can call it. Strategic is by far the biggest one, maybe even half of it. And this is all the big companies they own, significant holdings like New Hope, Brickworks, TPG, Tours, which I do like, and a few others in there as well. I'm trying to remember the few others. I can't. Oh, Ares Resources, which is not that big. Large caps is just big companies on the ASX. BHP, CBA, Wesfarmers, I think, Woolworths. I forget which one they do own. Not sure why big caps or large caps, not necessarily high quality. Private equity, I don't know anything about the companies in that because it's private. Credit, which is loans or something like that. Electric Optic Systems is a part of that. Emerging companies, don't know anything about emerging companies. I'd love to see some of the names in the emerging companies and then property. Now they do have, here we go. So in strategic, so Tours, New Hope Group, don't care about Perpetual or Pagana Capital. Apex Healthcare, know nothing about, and then TPG and Brickworks. Oh, that's which ones have performed well? So really only Tours has performed well. New Hope, a little bit of a rise in the last few days, so that has helped it. So this is by far the biggest portfolio, strategic. Significant long-term investments in listed companies that generate reliable income. I'm not sure about Tours. I'm not sure. I would say Tours was spun out of TPG, and that's why they own it. Large caps, do they have a list of the large caps here? No, they don't. Now, in their financial report, they do have a list of the large caps they do own. I am almost certain. Private equity, that's got about Electric Optic Systems here. No, that's not, they're wrong. So they have AMP Control, Aquatic Achievers Swim Schools, Agricultural Portfolio, Iron Bark, Credit, this is Electro Optics, yeah. So they have a bit of debt, I suppose, they own. And emerging companies, no list of companies here. I'd love to know what is in the emerging companies portfolio. Anyway, if we have a look at the, still opening up, just ridiculous. Seems like they are focused on generating like income from dividends, that sort of thing. So my only probably gripe about this company is just their strategic holdings. I'm not a big fan of New Hope for a long-term position, maybe as a trade. Not the biggest fan of TPG. Brickworks is okay. I think that is a quasi-high-quality company. Tours has the potential to be a high-quality company, but you might have to wait like 5 or 10 years to really know if it is high quality. So I'm just going to go have a look at the report because I do name dropped a few companies in this one somewhere in it. Somewhere. Yeah, so here's their strategic portfolio with the holding and the valuation. So, for instance, Brickworks, they're holding in that company is 42.9% of Brickworks, which equates to 1.7 billion in value. New Hope, they own 39.2% of New Hope, which equates to $1.6 billion. And TPG, their value there is $1 billion. Tours, $632 million. They own 20.6% of Tours. And don't know anything about Apex Healthcare. Yeah, don't think that's publicly listed. I don't know. I've never said it. Anyway, let's go back. And here we go. Large caps portfolio. So BHP, Macquarie Group, Wesfarmers, CBA, and Goodman Group. Anyway, so, and that's it, I think, when it comes to name dropping. Maybe in their full year, the annual report, they name drop a bit more. I just really want to know their emerging companies' investments. Anyway, so let's have a look at the charts for both of these companies. By the way, Brickworks, yeah, the profit was up a fair bit. If you have a look at Brickworks, just the numbers compared to the previous corresponding period, you think the company had an absolutely amazing half year because, yeah, so underlying EBITDA up 472%, underlying profit up 308%, Statutory profit up 141%. The problem with that is last year those numbers were negative, and there was probably a one-off in there somewhere. So that's one of the reasons why I think looking at profit, that sort of thing, can be a little bit misleading because of one-offs. There are also probably some property revaluations that could have affected their profit last year as well. This company has a fair bit of property, and it's one of the reasons why I'm not a big fan of looking at profit for like REITs, because they just go through property revaluation, and sometimes you'll see a really big change in profit from one year to next just because of property revaluations. And yeah, for me, it's sort of nonsense. Anyway, so Brickworks, yeah, definitely a quasi-high quality company. In fact, I'd say both are quasi-high quality companies. So let's have a look at the chart for both Soul Pattinson and Soul Patts and Brickworks. Now, if you look at Soul Patts' chart right now, nothing's happening. Going sideways. Now, if the share price fell to, say, $30, I might be interested. Say 31. Maybe not 30, because that would be a little bit concerning. Maybe 31. That's a nice little support level. I'm going to put a line right there, 31. That's a nice support level for Soul Patts. And share price of Soul Patts is really struggling to get above $36. It's tried about 4 times, and it's just not happening. And if you have a look at the weekly chart for Soul Patts, it has this is the chart of a high quality company. And if you put in the 200-week moving average, whenever it gets to the 200-week moving average, you buy. And it's not that far off right now. In fact, the 200-week moving average is about $31. And the same can be said for Brickworks. In fact, I think the share price might be below the 200-week moving average. Yeah, it's just fallen below. So this could be a good time to buy Brickworks, just based on the chart. The weekly chart, if you think this company is high quality, which I think there's definitely an argument. Okay, let's move on to the next company. We have Nanosonics, Pioneer Credit, which is already a stock of the day, so there's no going around that. Nanosonics or Findi. Let's talk about Nanosonics first. Nanosonics share price up 13.3% on one of my favorite type of announcements, FDA approval. Nanosonics receives FDA de novo clearance for Coris, C-O-R-I-S. Is that how you pronounce it? I'm just assuming. In fact, I didn't even open up this announcement because it's in the title. FDA approval for this particular product. So this would be, well, they don't have an about. I wish they had a little bit of about section here. The first phase of commercialization remains on track for the first quarter of fiscal 2026. So they have one product. So this is a second product. Yeah, so this is in regards to endoscopes, I believe. They mentioned it in this announcement. Yeah. Novel technology designed to reduce infection risk and enhance patient safety. Endoscopes, which are primed to biofilm buildup. So definitely a company I do like. This company's gone through some hiccups over the last few years, but I do prefer companies that have multiple products they are selling, not just one. And Nanosonics is definitely moving in that direction. Might take them a long, long time before I'm comfortable with what they're selling, but I do like this company. Now, Nanosonics share price has been under stress, but it has been showing signs of turning around. Their results were quite fantastic, really nice results. And if you have a look at the weekly chart, so prior to like 2022, this was sort of the chart of a high quality company. And since then, not so much. So we had to question this company because they were going through a period where I wouldn't say they were struggling, but things weren't actually moving in the right direction. Now, if you have a look at the daily chart, yeah, this daily chart looks really good now. And they released their results what day was that? 20th of February, share price up 23% on that day. Nice little pullback to the 25-day moving average. So this is definitely a chart that I like. This is a chart I like. By the way, I am a shareholder of Nanosonics. Did I mention that earlier? And probably, I'm not sure why I'm not trading this now, because this looks like a nice little trade. Share price now at a multi-year high. Yep, last time share price was this high was back in August 2023. And that's exactly what I'm looking for. Okay, so that's Nanosonics. Now onto Findi. And I've already discussed Findi to a certain degree. Company went into trading halt on the 18th because of increase in ATM. No, actually, they went into trading halt on the 14th because of a positive outcome from an Indian government ATM fee structure. I don't know. And then it was positive outcome. And then they announced increase in ATM interchange fees on the 17th. And the next morning, they released that at 4:24 p.m. The next morning, they went into trading halt for a capital raising, and they completed the capital raising, the placement, not the whole capital raising today, $40 million. So I think it was $35 million placement, $5 million SPP. Am I right? No, $45 million capital raising, $40 million placement, of course, because it said $40 million placement there. So $45 million capital raising, $40 million placement, 5 million share purchase plan. I would rather the share purchase plan be the greater of the two. And the price of the capital raising was $4. Now, this could be a really strategic capital raising, announce a capital raising just after they announce really good news, because we have seen the market say, hey, we know the capital raising is being done at a discount, but we don't care. Really good announcement. What was it? The expected profit's going to significantly increase for this company because of the impact of these increase in fees. For instance, $5.5 million in financial year 26, $10 million in financial year 27, and that does need a re-rating or should lead to a re-rating in this company's share price, and that's exactly what it's done. So you know there's been a capital raising, share price is up 19.5%. This could be a breakout as well. Chart before this was not looking that flash hot. Even today, it's not looking flash hot. It's all over the place. In fact, it wasn't that long ago, share price was higher than this. So a fair bit of volatility in Findi. And I do think the low, which was 350 not that long ago, has been reached. I can't see how or why the share price will go any lower than that. But not the breakout I thought it might have been. Very close, though. Okay, that's Findi coming in at number 2. I've already talked about Pioneer Credit in a standalone video. It's the stock of the day, thanks to a comment from Ben Hutchison. And one of the more intriguing titled announcements a company can release, response to false market. That had me intrigued just from the title. What do they mean by false market? I thought maybe rumors, and that in a way there was rumors, but there was a sell down of shares. And the reason why a shareholder decided to sell down some shares is because their portfolio was under pressure or something like that, and they decided to sell Pioneer Credit shares. So they might have been dripping the shares onto the market and then they sold en masse. So there is a chance that the selling has come to an end. And as Ben Hutchison mentioned, yeah, the company, based off their reaffirmed guidance, the company might be looking fairly cheap. Financial year 26 profit of at least $18 million. The market cap of the company is $70 million. So just do the quick math. The forward PE ratio is like 3 if they achieve that guidance. Okay, so that was stock of the day. Now let's move on to let's just talk briefly about Cleanaway. Why not? It was going to be in my top 5 stocks of the day, and I decided to spurn it for Findi. They made an acquisition of a company called Contract Resources, which deals with chemicals, cleanup of chemicals, or something like that. So Cleanaway is a waste disposal company. You see the trucks everywhere. I see the trucks everywhere. So they're sort of diversified in this area. They've bought it at 7 times EV. Now, they've also mentioned post synergies. I hate whenever a company mentions synergies when it comes to a net acquisition because we don't know. They're just guessing, really. But not a bad value for Contract Resources. Also, nicely growing company. They talked about the growth in Contract Resources, and it's nicely growing company. So this could be a pretty good acquisition for Cleanaway. And let's just have a look at chart. For Cleanaway Waste Management, oh, the chart doesn't look that good. Now let's have a look at the weekly chart. I've never, ever had a look at this company before. And just based off, well, maybe not. Or no, that Cleanaway doesn't go back that far. Now, if you go back to 2016, the share price broke out in August of that year, so it would have been good results. And the share price has consistently remained above the 200-week moving average, except for a few occasions. And right now is just on it. So maybe there is some value here for Cleanaway Waste Management. Okay, so now on to some comments. John CJJ77 says, hi, Kneppy. Is Premium Investments considered a high-quality business? The valuation looks reasonably cheap. I'm currently staying away from Premium Investments because they have divested all their crappy businesses, crappy brands, what do they call them? It's like Just Jeans and the other ones, I don't know what they're called. And they decided just to keep Peter Alexander and Smiggle. And you'll notice the share price has dropped a lot. So I'm assuming, without even looking at anything, that the reason share price has dropped a lot is because of this divestment to Myers. Now, Myers share price has also dropped a lot. So what's going on there? So I don't know. I'm going to have a closer look at this because the share price has dropped a fair bit. And the other thing is, if you have a look at where the share price is based off the moving average, share price is well below the moving average, 200-week moving average. So there is possibility there could be some good value here. And I would say and call Premier Investments a high-quality company, even with those crappy brands like Just Jeans and what else was there? Just Jeans and Jeans West, maybe, I don't know. Also, did the company have a big dividend? 70-cent dividend on the 10th of December. Oh, that was a while ago. 10th of December. Let's have a look at the chart. Oh, maybe they went ex-dividend on the 13th of January. No, actually, no. That says 13th of January. No, ex-dividend 10th of December. I don't know. I'm confused. Okay, so I'm just going to have a quick look. Yeah, it's complex. Completion of transaction with Maya, return of capital in specie distribution. I'd like just to, it's hard because they divested all these companies. I want to see how Smiggle and Peter Alexander are doing, and just based off how they're doing, what the valuation of the Premier Investments company is right now. So I've been pushing the company aside, even though share price has been dropping. So that's what I'm going to say. I don't know. It's hard to know. Like their last trading update, 13th of January, let's see what they said. I'm assuming this is post selling. Here we go. Premier Express said it's a power brands business consisting of Just Jeans, JJ's, Portman's, Dotty, and Jackie U. Yeah, so those are crappy brands. I'm going to say it right now. Those are crappy brands. Anyway, so I'm not sure if these numbers include those apparel brands, which they probably shouldn't. And they also own Maya shares as well, I'm pretty sure. So it's a complicated business now, a lot of moving parts. So maybe this is a good time to buy Premier Investments. Maybe, I don't know. That's the whole thing. I just don't know at this point in time. Okay, and P. Vassie says, do you use Commsec for trades? No. I do not use Commsec at all. I do like their what do you call it, their platform, but not to trade because of the fees. Simple as that. I don't understand why they charge so high fees. Now, when I first started using Commsec, many years ago, $20 a trade, ridiculous. And they decided to decrease to like 10 for shares. I think it was under, if your trade was under $1,000, oh, we're only going to charge you $10. Ridiculous trading. And I don't understand why anyone trades through Commsec anymore because of the fees they charge. I just don't understand it. In fact, I'm going to have a look to see if they have changed it. It's just ridiculous. There's no reason. Commsec fees. Here we go. What are Commsec's brokery rates? Clicking here. Oh, they have decreased it, looks like. $5 to $1,000, $10, $1,000 to $3,000. Still got $20,000 or $20 over $3,000. So they have changed it. So it's actually now a little bit more attractive because it's $10. But once you go above 3,000, I have no interest. Yeah, no interest at all. Although, if we do see a significant pullback in the market, if that happens, I do have a margin loan with Commsec, and then I'll use it. Yeah, then I'll trade through Commsec to take advantage of my margin loan. So I do have a margin loan sitting there that I can use. And that's strategic. That is a strategic decision in case we do go through a significant recession and drop in the share market. Okay, that's all I have for you today. If you have any questions, any thoughts, leave those in the comment section of this video. Otherwise, I'm not a financial advisor. If you need financial advice, make sure you seek out someone who is qualified and can speak to your own financial needs. That's it for this video. Have a good day. Bye.